Mizuho downgrading multiple EV stocks, Tesla, Rivian, and NIO, all now rated neutral despite expecting long-term gains. Analysts warning demand, increasing inventories, and liquidity issues are creating challenges into the next year. They've sort of highlighted these companies separately, but really there is the overall theme that we've been talking a lot about, which is that yes, EVs adoptions are still growing, but not at the rate where it has been.
Yep.
You look at where they expect it to be. EV growth now expected to be 15% year on year. That's compared to 25% where it was before. So yes, 15% not so bad, but when you compare it at how quickly it's grown, certainly not good news for those companies.
Resilience, competition, and innovation. NIO. This is a company that has been making waves in the electric vehicle market, but right now, we're seeing its stock struggling to maintain momentum amidst market volatility. Will NIO stocks continue to decline, or will the recent updates from NIO signal a turnaround, causing NIO supporters to start earning profits? This is a question that many investors are eager to have answered. Stay tuned until the end to find out. CEO William Li recently spoke at Harvard University, making a strong case for greater openness in the Chinese EV market. He highlighted how this could drive innovation and growth industry-wide. But will this push be enough to turn the tide for NIO stock performance?
But it's going to be a very challenging market for all EV makers, including NIO, with the pricing conditions in order to sustain the volumes that they've been able to achieve in the second half of last year. And I think going into this year, we're seeing weakness in demand, which is going to plague the industry going forward, and it's going to continue to put pressure on pricing.
NIO has had a rough ride in the electric vehicle market lately. Since the beginning of 2024, the company's stock has taken a significant hit, plummeting by 53.8%. Back on April 15th, NIO is trading at $3.74, and it's down by 5.35%. The downward trend continues, with a notable 14.41% decrease over the last 5 trading sessions and a staggering 32.49% drop over the past month. Technical indicators paint a bleak picture, with an overall sell rating and moving averages signaling a strong sell. Adding to NIO's woes are challenges in meeting delivery expectations. Recent figures fell short of analyst forecasts, with a slight dip year over year. While March saw a rise in deliveries to 11,866 vehicles, the first quarter of 2024 totaled 30,053, marking a 3% decline compared to the previous year. Despite these setbacks, Macquarie analysts remain cautiously optimistic, offering a neutral outlook with a price target of $5 as of April 15th. They see 2024 as a transition year for NIO, focusing on enhancing margins amidst fierce competition in the EV sector. In contrast, competitor Li Auto has received a more favorable assessment with an outperform rating and a price target of $40, citing strong sales volumes, superior margins, and positive cash flow trends.
NIO has yet to become profitable, unlike its rivals like Li Auto, even XPeng, targeting 2025 to become profitable. What about the unveiling of new vehicles? How are they doing compared to the likes of Tesla? I'm hearing something about a mass market brand that they're going to be putting to market soon.
Well, yes, they have a brand strategy to broaden their brand portfolio. NIO was launched as a more premium offer.
Now, what could be the possible reasons behind NIO's stock decline? Despite strong performance in Q4 2023, where NIO delivered 50,045 premium smart EVs, marking a 25% increase year over year, and cumulative deliveries for the entire year surpassed initial goals by over 30.7%, the company faced challenges in maintaining growth. Looking ahead to 2024, management anticipated a rebound in deliveries, with 32,000 units expected in Q1 alone. However, the slowdown in sales growth and the dip in margins have hindered NIO's path to profitability. While there was an improvement in consolidated vehicle margin from 6.8% to 11.9% in Q4, it remains lower than in 2021. Despite a year-over-year revenue growth of only 6.5%, NIO experienced a significant decrease in gross profit from Q3 2023 to Q4 2023, with a gross margin of 7.5%. Additionally, the loss from operations increased by 36.8% quarter over quarter, and the net loss rose by 17.8% from the previous quarter. The company's expansion of its battery swap infrastructure in China aligns with the growing demand for swift charging solutions, particularly highlighted by analysts' forecasts of the battery swapping mode market reaching $45.8 billion by 2030. Investing in NIO now could mean investing in the development of this expanding market and the potential growth expected from the launch of its new model next year. Furthermore, NIO has ambitious plans to introduce its second brand to the mass market in Q2 of this year. Products will launch in Q3, and the mass release is slated for Q4. The management targets approximately 200,000 total units for 2024, representing a 25% growth after implementing various initiatives and improvements. While prioritizing gross profit margin for its NIO brand products, the company aims to focus on volume for the mass market brand. With these strategic moves in place, it's plausible to anticipate that the current margin decline may be temporary, presenting an opportunity for investors to average down. Now, analysts are emphasizing the importance of considering the high risks associated with investing in NIO and its peers. It's crucial for investors to thoroughly assess these risks independently before making any investment decisions. Despite previous bullish sentiments, recent declines in the stock have led to a loss of conviction among some analysts. The primary concern revolves around the potential for a continued slowdown in sales growth without a corresponding improvement in margins. The market expects both business growth and margin growth from NIO for its stock to flourish. However, the current competitive landscape in the EV industry poses challenges to achieving these expectations. Additionally, it's noteworthy that on a trailing 12-month basis, NIO spends approximately $3.6 billion in operating expenses while generating only $430 million in gross profit. If costs don't decrease soon, NIO may face the risk of dilution as it seeks additional funding. These factors underscore the importance of carefully considering the risks associated with investing in NIO. But what is NIO CEO William Li's response to NIO's recent struggles and the ongoing downward trend in its stock? Despite Li's recent speech at Harvard University on April 13th, discussing China's economic landscape in relation to EVs and emphasizing the importance of openness and transparency, NIO stock hasn't seen any positive impact. Despite Li's optimism about NIO's future success and his acknowledgement of the challenges posed by increasing competition in China's EV market, investors remain skeptical. The stock has been on a downward trajectory for the past month and shows no signs of recovery. Shares have been down more than 50% over the past 2 quarters. Li praised Tesla for its role in promoting EVs in China, but the current market dynamics raise concerns about smaller companies like NIO. With Tesla and other larger players potentially dominating the market, NIO's position could become even more precarious. As a smaller player in the industry, NIO may face challenges in competing with these larger rivals and sustaining its growth. Investors are likely looking for concrete plans from Li on how NIO will navigate these challenges and remain competitive in the evolving EV market landscape. On April 30th, 2024, NIO's stock price closed at $4.72 following positive updates regarding innovation. NIO updated its website and announced the launch of a new sub-brand called onvo. It is specifically designed for families and is expected to transform the way we travel. The first model under this brand, the L60, will be unveiled in mid-May. This announcement from NIO has been received positively as it promises to bring a new era of innovation in the automobile industry. Although the temporary webpage showcasing onvo was taken down shortly after it went live, some key details were revealed. The page suggested that onvo would have a comprehensive app that offers features like in-depth car information, personalized car configuration, effortless charging solutions, and onvo Mall, a one-stop shop for car accessories and lifestyle products that cater to every family's needs. We'll have to wait and see if this is officially unveiled soon and if it will have an impact on the performance of NIO's stock in the coming days. NIO is making strides in delivering innovation by offering customers a chance to experience the future of long-distance driving with a trial program for their groundbreaking 150 kWh semi-solid-state battery pack. This innovative technology offers an extended range, potentially eliminating range anxiety for many drivers. From May 1st to 31st, customers can rent a NIO vehicle for 3 days or more through the NIO destination service and will have the opportunity to be randomly selected for a trial of the 150 kWh battery pack. This powerful battery offers significantly more range, potentially allowing for longer trips between charges. After the trial, the 150 kWh battery pack will be available for daily rental starting in June 1st, 2024. The pricing will be tiered based on the size of the battery typically used in the customer's NIO vehicle. This trial program is a significant step forward in EV technology. By offering early access to the 150 kWh battery pack, NIO is demonstrating its commitment to innovation and range extension, potentially making long-distance electric travel a more practical and attractive option for many drivers. Now, the delivery numbers. The delivery numbers for the end of April will be an important indicator of NIO's success in the market. On May 1st, NIO announced that they delivered 15,620 vehicles, a significant year-over-year increase of 134.6%. From January to April 2024, NIO delivered 45,673 vehicles, which represents a 21.15% increase compared to the same period last year. NIO's cumulative deliveries since inception stood at 495,267 vehicles, close to the 500,000 unit mark. Industry analysts are abuzz with speculation regarding the drivers behind NIO's surge. Some point to the potential impact of the recently launched 2024 ET7 sedan. This highly anticipated model boasts industry-leading range estimates and advanced autonomous driving capabilities, potentially attracting a new segment of environmentally conscious consumers seeking a premium driving experience. What are your thoughts on NIO's attempt to dominate the EV market? Will NIO ever turn a profit for its shareholders, or is it still a pipe dream? Or you are ready to reap the rewards of your investment? Share your thoughts in the comments section below. And that's it. Make sure to click the like and subscribe buttons down below. Additionally, if you want to know about investing in NIO, just click this video right here. Thank you for tuning in, and stay tuned for more exciting content in the future.